Cathie, I want to switch gears a little bit. Let's talk about ARK more broadly. Investors stuck with you during losses in 2021 and 2022. This year, however, you're seeing outflows even as you're rebounding. What does that signal to you?
So our asset retention has been spectacular. I think everyone would agree with that. Asset retention through 21 and 22. We are up more than 50%, some of our funds 60% plus. So there would be natural profit taking, but there's something else that has happened over the last year. Our stock developed what traders would call a very nice base, a trading range. And I think we began to see opportunistic trading in the mid-30s to the mid-40s, and it seemed to top out regularly in the mid-40s. Well, we've just broken through that. And so recently, this week, our flows picked up very nicely because there are traders out there who are looking at ARK stock and says, wow, if it breaks out of this nice long base, it could have a very powerful move here. And as you can see from the chart, we are still down. If you compare ARKK to the NASDAQ 100, you'll see the NASDAQ's getting close to its all-time highs, and ARKK, which is full of innovation, is much closer to its lows. So I do think we're beginning to see investors shift from the NASDAQ 100 or NASDAQ, take maybe losses or gains there and into our innovation fund, because I think the values when it comes to innovation are in our fund.
Where is that value, Cathie? Let's maybe look at that chart on a longer-term basis. Let's say since ARK's inception in 2014, and I know you invest in disruptive business models, so you take a longer-term view. But over that time, ARK has underperformed not just the NASDAQ, but the S&P 500. How should investors view your proposition, your value proposition to them?
Well, I think they should put into context what has happened in the last 2 years. Interest rates. The Fed jacked interest rates up 21-fold. Any long duration asset, and in the world of equities, innovation is going to be the longest duration. All long duration assets were slaughtered last year. The bond market, now that's long duration as well, but it's usually a flight to safety vehicle. The bond market last year had its worst year since sometime in the 1700s. If that was going to happen to bonds, which are usually flight to safety, just because they were long duration, that was going to happen to ARK in spades, and it did. Now, where are we? The market is starting to look to the other side of the interest rate increase, and they're starting to look at inflation, which is crumbling. Inflation is crumbling. I know that a lot of people use the word sticky, but you look at the leading indicators of inflation. You look at the leading indicators of inflation, they are coming down rapidly. And we do believe we're going to see deflation, which we're already seeing it in many places, but even in the broader based indices, and the Fed will have to adjust, and we'll be on the other side of the horror show we just went through.
Cathie, you've been talking about deflation for a long time, though. And some would argue many, though, missed, including the Fed itself, the rise in inflation and how sticky it has been. So what makes you think now is any different? Why should investors believe you this time when sort of you, but many others as well, have been wrong about it?
I don't think we've been wrong about it. When we were in COVID, we were talking about inventory shortages that would cause supply chain problems and the inflation that would come from that. Sure, we didn't know about Russia's invasion of Ukraine, but I think when history is the judge, and it will be, that history will judge the inflation we went through as the result of a massive supply shock to the system. Mm-hmm. And they will look at the comparison, not to the 70s, which I know Larry Summers and Mohammed El-Arian and others have used that analogy. We use the 19-teens. We went through a pandemic back then, the Spanish flu. We went through a war, World War I. We were on the gold standard, so money supply had to fall as inflation went up. Inflation went to 24%, June of 1920. dropped to minus 15 in June of 1921, and we moved into the roaring 20s. Why? Massive innovation, telephone, electricity, automobile. This period is much more like that period than like the 70s. And again, when history is the judge, it will look at the inflation chart, which went like this and is going like this now. And it will seem like it happened in a flash, even though going through it feels like we're in slow motion.